SpaceX stock just lost half its value in 6 weeks. The world's most anticipated IPO went from $225 to $115, wiping out over $1 trillion in market cap. What went wrong? Let's find out. SpaceX went public on the NASDAQ on June 12, 2026, under the ticker SPCX. The IPO price was set at $135 per share, instantly making it one of the largest listings in history. The stock exploded higher in its first week, hitting an all-time high of $225 just 3 days after listing. At that peak, SpaceX was briefly among the world's 5 most valuable companies. But the honeymoon didn't last. By mid-July, shares had fallen below the IPO price. As of July 23, 2026, SPCX trades near $115, a 49% drop from the high. What triggered the sell-off? First, the post-IPO lockup period is expiring. Insiders and early investors, including employees, are now free to sell their shares, flooding the market. Second, Starship development hit another snag. The 13th test flight was delayed, and a previous test ended in a fireball. Investors are losing patience with the timeline. On top of that, SpaceX announced plans for a $20 billion bond offering to fund its AI expansion. That spooked markets. More debt means more dilution for equity holders. The AI segment itself is a double-edged sword. SpaceX's AI division runs Grok, the X platform, and massive compute infrastructure. It's capital-intensive and not yet profitable. Meanwhile, Google's parent company Alphabet disclosed a $94 billion stake in SpaceX after the IPO. That's a massive vote of confidence, but it also means Google holds huge influence. Despite the crash, Wall Street analysts remain bullish. The average price target is $240, over 100% upside from current levels. HSBC initiated with a hold and $115 target. But retail sentiment is bearish. After-hours trading dropped another 1% today following a Starship launch delay. Many traders are waiting for a successful test to re-enter. Cathie Wood's ARK Invest bought 116,971 shares worth $17.8 million during the dip. She's betting on the long-term vision, Mars, Starlink, and AI dominance. SpaceX's core business is still strong. Starlink now has over 4 million subscribers and generates billions in revenue. The launch business is also profitable, with a backlog of contracts. But the market is pricing in execution risk. The Starship program is essential for Starlink V3 and deep space missions. Every delay hurts the narrative. The bond offering, at least $20 billion, will be used to build AI data centers and expand Grok. SpaceX wants to compete with OpenAI and Google, but that requires enormous capital. Moody's, Fitch, and S&P all gave SpaceX investment-grade credit ratings with stable outlooks. That helps the bond sale but also shows the company is taking on significant debt. Short sellers are circling. The stock has seen increased short interest, and some analysts warn that the lockup expiry could push shares even lower, possibly to $100. On the other hand, technical indicators show a golden cross on the moving averages, which is a bullish signal. This suggests the selling might be overdone. German satellite maker OHB just launched a share sale with KKR to capitalize on the space stock frenzy. That shows the sector is heating up, but competition is also increasing. SpaceX's valuation has dropped from over $600 billion at the peak to around $350 billion now. That's still enormous, but the correction has been brutal for late buyers. The next catalyst is the first earnings report, expected in August. Investors will see real numbers, Starlink revenue, launch margins, and AI spending. That could make or break the stock. Another key event, the next Starship test flight. If it succeeds, the stock could easily bounce to $150. If it fails, we could see another leg down. Elon Musk's involvement is both a blessing and a curse. His tweets and public statements have already moved the stock. His attention is split among Tesla, X, and SpaceX. Institutional investors are watching closely. The bond offering will be a test of market appetite. If it's oversubscribed, that's a vote of confidence. If not, more pain ahead. Some analysts argue that SpaceX is a buy at these levels. The long-term thesis, reusable rockets, Starlink monopoly, AI infrastructure, remains intact. The short-term noise is just that. But others say the stock could fall to $80 if the lockup floodgates open. The risk-reward is asymmetric. You're betting on execution in a capital-intensive business. What about the broader market? The AI infrastructure theme is still strong. Companies like Broadcom and Nvidia are thriving. SpaceX is trying to ride that wave, but it's not a pure play. Ultimately, SpaceX SPCX is a story of extreme volatility. $1 trillion swing in weeks. It's not for the faint of heart. But for those who believe in the mission, the dip might be an opportunity. We'll keep tracking the lockup, Starship, and earnings. If you want to stay ahead of the next move, hit subscribe and turn on notifications. Thanks for watching.